So, guys, I don't have a headset today. Hopefully the sound is okay.
What happened to your headset?
It's sitting on the desk at home.
That's a good place for it.
Right?
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Recorded November 3rd, 2017. It's the Money Path Podcast with your host, Bob the Iceman Iceaccino, and Mike Arnold, founders of Path Trading Partners. On episode 96, The What and the Why is sponsored by Motive Wave. Go to Path Trading Partners, download your 14-day free trial. So let's join the Ice Boys with the Ice News and Ice Conversation on the ice markets.
Well, then why don't you, speaking of volleyball, why don't you tell us what's going on with the payroll numbers?
Speaking of volleyball, no, you need to come up with an actual good segue or I'm not speaking.
No, that is.
No, it's not.
It is. Speaking of volleyball, what's going on with the payroll numbers? It's payroll Friday.
Thomas Sowell once said that some things are facts because they're demonstrably true. Other things are perceived as facts because they're repeated over and over again. Just you saying that is a good segue does not make it a fact.
Well, I'm going with it. Speaking of volleyball, what about those payroll numbers?
Terrible, terrible.
It's not supposed to be good.
261,000 jobs in October, 310,000 jobs expected. So we missed by, what is that, 49,000? 49,000 versus the estimate. However, last 2 months were adjusted up. I didn't notice the amount of the adjustment up from the last 2 months, but I know that the decline of 33,000 for September was revised up to a gain of 18,000. Oh, here it is. August was revised from 169 up to 208. So when you add those in, this miss wasn't a big deal because essentially the last 2 months made up the level of the miss. So back to growth on that. Wage growth, though, was disappointing. Hourly earnings actually fell by a cent, 2.4% annualized gain now. That's a drop. Last month, we saw 2.9% annualized gain.
And they were expecting 2.7.
Yeah, they were expecting 2.7. That drop by a cent had a lot to do with 106,000 of the jobs that were added were leisure and hospitality, which tend to be a little bit lower paid. So that had a lot to do with it. The U6, though, which is the headline unemployment number dropped to 4.1, 4.2. But the U6, which is the unemployed and the underemployed, meaning that people who are like working part-time because of economic reasons but would really like to work full-time, those that are discouraged because they can't find work are counted in the U6 versus the headline number, which doesn't count those people. That actually dropped to 7.9%. That means we're back down to pre-crisis levels on the U6 in the unemployment rate. But the labor force participation rate dropped as well. I don't know.
968,000 more people dropped out in the last month. So right. It's now up to a record 95.4 million people not in the labor force.
Right. It surged in September by 1 million. So they kind of offset each other, but it's still, like Mike said, we're still at a record 95.4 million. But again, that U6 number is encouraging. So to me, this jobs number overall was a miss, mostly because of the hourly earnings. The headline numbers and the job additions are still kind of screwed up because of the hurricanes and stuff. So that's essentially it. That's what happened. Stocks were lower right after the number. The only one that was higher was the S&P, and that was because of Apple.
So, Bob, speaking of oranges, what's going on with Apple?
Apple beat on EPS by 20 cents over the estimate. They beat on revenue by 2.1 billion. So they crushed it, essentially. I guess the iPhone 8 was a much bigger seller. And that's something I actually wanted to ask you guys, Stafford, you and Mike. Does that mean that the X is going to be disappointing? Were people rushing to buy the 8 just because they didn't like the X? I don't really know what that means.
Well, I can just my X shows up today.
Well, you got the X.
Yeah,
So,
I wasn't planning on it, but I had to. My wife's phone is not working, and so I'm giving her my old one, and so I had to either get the X or the 8 or something. So I just walked into, what was it, like last Friday? You know, when all the pre-orders were joking about the people getting up at 3 a.m. Well, last Friday I walked in the T-Mobile's. What?
you told me last week it was all online that there were going to be no lines, but there were lines, right?
No, there's lines, I guess, this morning, but last week, you know, people were trying to order it online and everything else. And Friday afternoon, after we finished the podcast, I went into T-Mobile and I'm like, all right, I'm going to need a phone. Can I still pre-order the X? When would I get it? They're like, oh, sure. Yeah, if you pre-ordered it, we'll get it to you by next Friday. So this is a release day. So it's getting just shipped to me. It's on the UPS truck now. I didn't pre-order it till the afternoon. And it's just like, yeah. I was watching Bloomberg Television this morning, and I was surprised to see about 100 people in line outside the Chelsea Apple store in New York. So I didn't have any problem getting it like on release date. I don't know what that means. Oh, we'll find out. Well, you know, you gotta risk it to get the biscuit sometime. So,
Gotta lift big.
What?
Gotta lift big to get big.
Oh, there you go, Mr. Iceman. Iceaccino. What is it? What is that? Okay. Also, they now see their first quarter revenue at 84 billion, 87 billion versus previous estimates of 84.5. So they've sort of upped the range a bit. And fourth quarter iPhone units sold 46.7 million, estimate 46.1 million. So that's what Apple did. Hey, you know, their stock, big gap up. Big gappity gap, don't come back. Up to 1
from a $1 trillion company now.
What was that? Yeah.
$20 away from it being a $1 trillion company.
Well, they're trading back down. They're probably going to come back and fill this gap. I'm expecting them to trade back down to 170 and fill this gap, especially with the rising rotation zone on the daily. So we'll see if that happens. Another company that released Qualcomm released, and they sort of shot up this week after they released non-GAAP EPS 92 cents versus expectations of 81 cents. Revenue 5.96 billion versus expectations of 5.8 billion. And that is, they've really moved up nicely back into their congestion range. So next target, though, I have a really nice target on them. They're trading right now 55.15. I expect my next target is 56.29, followed by 56.78 are my two targets. So we still have room to run to the upside on that one. The reason I also bring up Qualcomm and Apple back to back is because Apple might build its next iPhone without Qualcomm chips. There's a new report out suggesting Apple may be ditching Qualcomm chips on its next generation headset. So, because they've been in that war, you know, where Apple's not paying Qualcomm for its licensing fees, and Qualcomm suing Apple, Apple's suing Qualcomm. Qualcomm's gone to the government saying, we want you to enforce, and they can't we don't want them to be able to sell their phones in the U.S., which it's sort of funny. So we'll see how that war pays out, but they both beat earnings. Who didn't beat earnings? Who did? I don't know. What would Facebook do? That we should stick with the text for right now.
Facebook beat.
Facebook.
Facebook.
Let's see. Not
warn.
Go.
Well, Facebook continues to warn that they're going to get hit soon, but they don't in terms of like their release, their numbers release. They continue to warn, like saying that they're about, they've got lower revenues coming. The seasonality of Facebook is really interesting because it tends to go down end of October and in November, and then rally throughout December. The biggest period of movement for Facebook is July through like the third week in October, and then it dips and then rallies in through December. So I don't have their earnings in front of me. Do you have them in front of you, Mike?
Yep, I do. Q3 revenue, $10.33 billion, expectations of $9.84 billion, earnings per share, $1.59 versus expectations of $1.30. So they really also beat their numbers handily. Daily active users, which everybody follows, 1.37 billion versus estimates of 1.35 billion. Shares fell after it said on a conference call that 2018 expenses would rise 45 to 60%, or faster than expected sales. So their expenses for next year are going to go up a lot faster than our sales.
What's that? What was the prediction about expenses?
Expenses are going to go up 45 to 60% next year.
That part of the policing of content?
I don't have the exact reason why that is, but
so
it's
why do they go on Capitol Hill and deny they're a media company?
They are a media company.
I know, but they don't. They say they're not. They say they're a platform.
Oh, brother.
They say they're not a media company. They're a platform. Yet they don't charge for their services as a platform. They charge for advertising, which sits next to the content that is put out, which is essentially, to me, the definition of a media company.
And aren't they going to? They've already talked to you. They're going to be producing their own media.
Yeah, they're producing their own content. But they go to Capitol Hill and they go, "Well, we really shouldn't. We really shouldn't be held responsible for the content on our site because we're a platform. We're not a media company. You're a freaking media company." I'm telling you, these Facebook, social media in general, but Facebook's they're the Philip Morris. They're the cigarette companies of the 40s and 50s. Social media is like the worst thing ever for the human condition, and they know it, and they're just pushing it out there like cigarette companies used to. I'd be willing to guarantee somebody can play this back 20 years from now. They're going to find emails and reports that social media is horrible for humans, mental health, causing suicides, but they've hidden it. Just like cigarette companies. And print it.
And rock and roll. You kids get off my lawn.
I'm telling you, it sounds like a crabby old man, doesn't it?
Well, it's almost like this is a little.
I told you my story of secondhand social media pain, right? Just like secondhand cigarette smoke.
Yes, we've talked about that.
I've told you that story.
Mm-hmm.
Social media is the worst.
It's the worst. Well, it's sort of like, we'll talk about this in a couple minutes after I get through a couple other companies, but Tesla's not a car company, it's a technology company.
Right. Yet somehow their stock gets hit when the tax plan is released and it cuts electric car subsidies.
Don't ruin it yet. There's so much juicy Tesla stuff this week. The conference call was the best.
We'll hold off on that.
First, before we get there, another stock we've been talking about that is not looking good, Under Armour. They should rename themselves Underwater at this point because
that was clever.
Their earnings per share 22 cents adjusted versus 19 expected. Revenue missed 1.4 billion versus 1.5, and they, those are adjusted earnings per share that they had to use to beat. The company now expects 2017 earnings per share to fall within a range of 18 to 20 cents adjusted. Previously, Under Armour had projected earnings of 37 to 40 cents a share. So they essentially slashed it in half.
Wow.
And they're down to $10.42, back from a high Their high back in 2016 was 46.53. So their stock's been cut like over 75%. Wow. Yeah. So that's not do not touch Under Armour based off this stock chart. I'm not saying it's going to go immediately lower. We could see a slight rally back up to like the daily rotation zone, but this is not a company I'd be trying to buy yet. There is no bottoming formation anywhere close to, since it just broke down from its $15 level all the way down to 10 based off their last earnings report. Just
if you like space, look at Nike. Nike is a buy for me. You look at the Nike Weekly. God, that sounds like I was saying it wrong. Nike Weekly sounds funny. You look at the Nike Weekly, and then you drop down to the daily, and you see an entry for that particular trade. So if you like space, go Nike.
We are looking to get the first cross rotation zone on the weekly and the daily. You've pulled back to the rotation zone and looking to move back up with a target return to about the 56.75 level.
Yeah, if you draw a best fit line on that daily, Mikey, you've got a decent potential entry today.
Yep. So that's what I would not touch Under Armour, and we like Nike much better. Under Armour based off its charts. Starbucks also reported they broke out of congestion with their earnings. Let's see, earnings per share came in with expectations at 55 cents, revenue $5.7 billion versus $5.79 billion, but they're up. I don't know what. Did you hear anything on Starbucks?
My guess is comps.
It had to be comps because they're now above. It looks like they're going to close this today above their critical congestion, which was at $56 for me, and now my target for them is $57.50. So we're going to also do a partial gap fill at least to the last breakdown zone for Starbucks. So Starbucks is one with this, especially this price action. Even if it pulls back to retest the 56 level, it's looking decent.
Trying to see if I can find their comps. Let's see here. I got something here. CEO optimistic he can exceed new growth targets in 2018. So let's just call it that they guided up.
Let's just call it they guided up. And now for our car company that's not a technology or whatever they are, or something that missed. Tesla's not having a good week. And it looks like it's going to, remember we've talked about that close below the 300 level to trigger that massive double weekly top. Looks like it's going to trigger today.
Oh, that's going to be
especially. We could see rallies back above 300. There's major resistance now at the 314 level, but those are sells to me. Mm-hmm. Anything now once this triggers is a sell to me. Our target just on the double top is all the way down to 220. But they are, this was a banner week for Tesla. Third quarter adjusted loss per share, $2.92. So that's losing $2.92 a share versus estimated loss of $2.27. Third quarter revenue did beat $2.98 billion versus estimates of $2.93 billion. Tesla plans to produce 10% fewer Model S and Model X in Q4 versus Q3. Their automotive margin missed. It was 25% in Q2. Now it's down to 18.7%. Earnings per share GAAP versus non-GAAP, and that was non-GAAP earnings per share. Their earnings per share GAAP was down below 350 loss per share. They're now still burning like this epic amounts of cash, outdoing Q3 with a record cash burn of $1.4 billion, or roughly 16 million per day.
Dear God.
Look at their total free cash flow chart.
What are they doing?
Well, the more cars they produce, the more they lose. What's shocking to me, this is fascinating. For most car companies, service and other revenue, most car companies make money on their service departments.
Mm-hmm.
Service and other revenue, their year-over-year growth was 141%. They were up to 304 million revenue in their service department. However, their gross profit, they lost 63 million. Oh boy. The conference call was hilarious. The company now anticipates, remember they were going to hit 5,000 Model 3s in December as guaranteed by Elon. Now they're thinking they might hit it in late first quarter 2018. And this is a quote, their production growth rate is like a stepped exponential. It's not like a step. Remember math class, Bob? Stepped exponentials. You know about those.
What?
There's no such thing as a step exponential.
I've never heard of that in my life.
This was from the conference calls. So there could be large forward jumps from 1 week to the next. Well, it's either exponential or it's not exponential. There's no such thing as a step exponential. Model S and Model X are on pace for about 100,000 deliveries in 2017. But that's really peaking out. Now they're going to deliver a few of them, and they blame that because they're putting more resources towards Model 3 production. I just think because their sales are somewhat drying up. That's why they're having to discount Model S's and X's so much, even though they don't offer discounts. If you go look on their sites, they're discounted. Anything already produced is discounted pretty big. What else? Oh, and Model 3 reservation holders, starting the day after their earnings, are already getting emails that their delivery timelines are being pushed back.
Talk about the conference call, Mike, because I listened to highlights of it, and he just sounded like a big, agitated baby to me.
Yep. Well, he was blaming their production misses on the Model 3 based off of bottlenecks in the Gigafactory, which is also his. Yeah. A supplier issue, and I guess they've rewritten. And I find this really hard to believe, but they were saying they rewrote.
It's all Panasonic's fault.
Yeah, well, which is funny because Panasonic's production facilities in Japan are some of the most top-notch battery production facilities. The big thing out of that, the word on the street from Panasonic and all the Panasonic engineers are that the Tesla people at the Gigafactory are nearly impossible to work with. But it's all Panasonic's fault. Now, where is this? Problems in Sparks. Musk claimed that Tesla is now rewritten. Listen to this. They've rewritten 20 to 30 man-years of software code in 4 weeks. No. And if you had to rewrite 20 to 30 man-years of software code in 4 weeks, I'm not trusting that code. And that's to trying to get the Panasonic cells properly working with the Model 3, the way they have to package them up for the Model 3. This is just Elon's off the rails with this stuff. It's not going well. And when asked, the best stuff was did you hear the big pause?
Yeah, I heard that.
The 12-second pause when it's like.
I heard that. It's like they were like passing notes back and forth as to what to say.
It wasn't like a 2-second pause. It was like dead air. It's like, without even the part. We don't know how to answer this.
It wasn't that hard of a question.
First, they have to get to 5,000. See, they're not even going to get to their 10,000 units per week because they have to essentially double their assembly line, which they don't have room for. And also 10,000. When GM and both Nissan or Toyota, was it? I forget who else had that plant before them. The most, I think it was Toyota, the most they ever put out was 300 280,000 cars out of that plant with a very efficient manufacturing process. They're not getting a 10,000 per week out of that plant because they have to double an assembly line and they'll run out of space pretty much. Everybody thinks in that plant first. This is just turning into a dumpster fire. And remember, they were talking about going to China?
Yeah.
Remember, they dropped that thing, what was it, last week or the week before? With, oh, yeah, we're going to expand into China, even though we have to pay additional 25% tariffs. Well, they just let that drop. That's not for an estimated another 3 years.
Right.
Like, what? That's not going to help.
It is. And I'm telling you, if this particular tax bill goes through with those subsidies cut in half, if it gets passed and that's not somehow removed or adjusted, which I hope it's not, because I don't believe in any subsidies in theory. Wow. I mean, you're talking about $180 on the stock or lower.
Yeah. Well,
you're talking almost 10% of the cost of a Model S.
And their margins, they're going to have to discount even deeper. What's interesting, though, is if you lose the $7,500 tax credit on the Model 3s and it's so far pushed out, that tax credit is not going to be available by the time most people get deliveries of the Model 3s.
No, and I mean, they're not talking about eliminating it, but they are cutting it in half. That's massive.
However, no, it's still capped, though, once you've produced 200,000 cars. They're going to hit between it being cut in half, and then once they hit that, it's cut in half again and starts its phase out. There's not going to literally be, for most people with Model 3 reservations, it's not going to exist anymore.
Wow.
That's the funny thing, because it's going to phase it out even quicker, what this tax plan is going to do, and it's going to dwindle. So if you get your Model 3 and there's anything left, it might be a $1,500 credit or something. It's not going to be a $7,500 credit. Mm-hmm. Now, back to our favorite analysts. UBS maintains Tesla's a sell with a 185 price target now. And now UBS lowers 2017 earnings per share from negative $5.30, from a loss of $5.30 to now losing $6.40 for the year. And 2018 earnings per share, they've lowered it from losing $1.60 per share to losing $3.30 a share. Mm. Goldman cut their price target to 205. So they're talking about, Goldman believes this further pushes out the potential ramp to 10,000 per week for the Model 3 to at least 2019, and that they won't expect a return above 20% on adjusted gross margin levels until the second half of 18, so they won't get back above that 20% gross margin on their vehicles. That they'll keep burning cash like there's no tomorrow. It's just, they gave a really bad outlook from Goldman on Tesla in general. So they probably won't get any more fundraising money from Tesla. Yeah. And that investor expectations for China should be tempered because it's for first production in the region would be around 3 years from now, i.e. 2020. Then let's see, there's a really interesting article in the Financial Times about the company. Yeah, they talk about this is the subcontractors in the battery factory really dropped the ball. It's really inefficient, is according to Musk. But they're talking about the newly installed KUKA robots. This is people who have seen the production line to speed up production are still being operated by hand, according to two people who visited the site in recent weeks. I've never seen so much manual labor on a line. One person who inspected car plants all over the world is swarming with people. When I go to a plant that's automated, I expect to see a lot fewer people. It was not efficient, says the person. So that's the people who have seen the lines just saying that there's a bunch of people doing manual tasks on these automated lines, and they're nowhere near close to being up to par. Yeah. And then this is classic. This is from the article. Tesla is no stranger to taking unusual approaches to save time. In multiple instances, the company shipped cars from the factory that lacked key parts such as computer modules, digital displays, or even seats. These parts were flown to Tesla-owned dealers who then assembled them into the vehicle before completing the shipments to the customers, according to several people familiar with the practice. I don't want the service center to finish assembling my car.
Dumpster fire.
We forgot the tires. We forgot the tires.
Oh, well, could you imagine, like, you go to pick up your GM or Toyota, and they're like, oh, yeah, the guys are just installing the computer modules. That it didn't come from Toyota with the computer modules. Don't worry. I'm like, this car is not a production car.
Right.
This is a joke.
It seem more like snake oil.
But the analyst Cohen, Tesla weakness should be bought. Outperform. Price target 411.
Yeah, I remember. Literally right after the conference call, I got an alert. What people don't understand and why they should own Tesla. I'm like, what's to not understand? They're a terrible company. That's what I understand.
Oh, what's also
basically was comparing it to Amazon 20 years ago.
Last time I checked, Amazon actually delivered what was ordered for the most part.
Number one. Number two, yeah, Amazon lost money for a long time, but Tesla doesn't have the ability to go into any industry they want like Amazon does. Like Tesla can't build an infrastructure and then all of a sudden start building, I don't know, shoes.
Another thing, even though they have their wonderful, remember their solar roof tiles?
Yeah,
there's not not a recorded single instance outside, like employees or other people who are testing the roof tiles. There's not an instance of one being sold yet.
Wasn't that part of the reason for merging with Solar City?
Yeah. It is a major dumpster fire. So what's also interesting is let's see, in October, Tesla delivered 1,120 Model S's and 850 Model X's, which gives you just under 2,000. The Chevy Bolt electric vehicle was 2,781.
Yeah, we talked about this a long time ago. I mean, not only is it their problems, but they have actual competition for people who believe that much in the electric car movement.
Yeah, so that's our rundown of Tesla. It's a sell.
What's your target on that if it closed below the double top?
My target is, I'll give you exact 219.27, so essentially 220 is the full target. And again, that's not going to get there instantly. This is a weekly pattern, so this could take. Our stop reduction on that is 261 area. If you wanted a first target, also it's 240, and second target about 220. So
going there quickly. They passed the budget with the reduction of the credit in there, and it's going there quickly.
Yeah, it could.
By the way, the tax reform package is not expected to be voted on for quite some time. So
yep. Now, in self-driving automotive news, Toyota's testing their self-driving cars at the Tough California Proving Grounds Go-Mentum station. They're training their autonomous cars for dangerous conditions. So they're actually going through realistic testing, Tesla. That's where they can. These are extreme driving events. They're putting through their automated to ensure that it can handle anything that can be thrown at it on public roads. GM's Cruise sets a special driving event for November 28th. The GM Cruise self-driving unit is hosting a special event at the end of November. The company revealed today. The tagline for the event is "Come experience our vision of self-driving future." They're going to start previewing their self-driving Chevrolet Bolt vehicles. which they're going to be rolling out at some point for the ride-sharing things, the ride-sharing services, they are really tackling. We've talked about it. They're currently the leader for self-driving vehicles, and they keep just moving forward with it.
Yeah.
And they don't get rid of all their technology suppliers whenever something they don't like goes wrong. I'm sorry, did I make another Tesla slam?
Tesla segment.
All right. Cryptocurrencies.
All right.
Speaking of Amazon, they're at the top of the cryptocurrency. You texted me this breaking off CNBC earlier this week. Amazon registers domain names, AmazonCryptocurrency.com, AmazonCryptocurrencies.com, and AmazonEthereum.com.
Yeah, the more I think about that, I don't think Amazon is coming out with a cryptocurrency, although they might. I think they're more protecting their brand. I think they more don't want somebody just having an ICO with the name Amazon attached to it.
Or maybe they'll start accepting Bitcoin or Ethereum as payment.
Well, they do in some areas already. But they accept Bitcoin, but you get an Amazon gift card and you get that right through Amazon as opposed to like a second party app. So you can get an Amazon gift card with Bitcoin.
Well, what if you could buy your toilet paper?
And it could be shipped with a drone?
Yes, and you did that all with Bitcoin.
It's all I want in my life.
Yeah, so you'll be able to convert your Bitcoin to Amazon goods pretty soon. We're going to have to keep Amazon once they get in everything. So we're just going to have to see how this plays out. By the way, we talked about Tezos. That was a couple months ago that did their huge fundraiser for their ICO back in July. But now there's a big feud over control that threatens to derail one of the biggest ever digital coin offerings. This is why these are dangerous. They raised $232 million online with their initial coin offering. But now the venture's in danger of falling apart because of battle for control playing out behind the scenes. This dispute is between the Tezos' two founders, Arthur and Kathleen Breitman, against Johann Gevers, the president of a Swiss foundation that the couple helped establish to handle the coin offering and promote the development of the Tezos computer network. So this foundation is supposed to be independent. It holds all the funds raised, which have mushroomed to more than $400 million in value because the contributions were made in two cryptocurrencies, Bitcoin and Ether. And we've seen Bitcoin rally huge, above 7,000 this week. The Breitmans, who still control the Tezos source code through a Delaware company, are seeking to oust the head of the foundation. So there's just a huge back and forth, and the head of the foundation, who controls all the money raised, said he's not stepping down. And they're like saying, well, we're not releasing our source code, so we don't know. This is all going to court. And people don't know how, because it's all tied up in this. The ICOs can't be released. The coins can't be converted to anything. So if you have any Tezos, which are the ICO, you might want to look into it. It's not looking so hot.
I read the other day 1,097 cryptocurrencies, and that count was as of the end of August.
And under the terms, this is interesting, under the terms of the Tezos coin offering, there's no guarantee participants will ever receive a single Tez. Participants agree to accept the risk that the project, quote, may be abandoned.
And that's it.
Yeah, it's like,
you ever heard about that, like the original get-rich-quick scam that happened like 100 years ago? Some guy put an ad in the newspaper of note, whichever newspaper that was in a particular town, and he said, get my book, Get Rich Quick, just send $1 to this address. And when they got the book, it was a leather-bound book with one page in it. When you opened it, it said, do what I'm doing. And Mikey's.
You get to invest in me, and you get a Mikey coin. And then you can have the Ice coin, Bob. Is there an Ice coin yet?
Oh, there's got to be.
You can have the Iceaccino.
It's like an obvious name. Let me look. There's got to be. Let's see. Ice coin. Ice coin, the Victory Club. Our Victory Ice coins are what we call a cryptocurrency, or a complementary currency to all national currencies we exchange a complementary currency into. There's Ice coins.
Did they know your nickname was Iceman? or Ice? Bob Ice?
Considering it was a high school nickname, and I'm now 51. I don't know. Oh, they have their own little, like the Bitcoin image. They have their own little Ice coin image.
Now, in more serious Bitcoin news, CME, they're launching the Bitcoin futures. You've been talking about this, Mr. Famous TV personality and radio personality.
Yes, I have. I did.
So what are your thoughts on the CME Bitcoin futures?
I think it is brilliant, and I think the timing is really right, as evidenced by Bitcoin going from just under 6,000, over 7,000 after the announcement. It now allows institutions to seriously get involved in Bitcoin specifically. Now, the CME has had sort of a Bitcoin composite index since November 2016. I forget what they call it, but I can find it real quick. But they've had that since November 2016. They've been sort of accepting of cryptocurrencies at the margin for 2 years, or for a year now. The fact that they're releasing a futures contract out of the cash-settled futures contract means that your large institutions can get involved in it. They can buy and hold for their clients, and they can hedge that risk at the CME. So it gives it it's just a huge step toward the credibility and the acceptability in the public of Bitcoin. I contend this is actually going to it's going to increase the acceptance of Bitcoin as a currency at retailers, I believe, because now large retailers can hedge. You know, if you're a company and you take money in foreign currency, you can hedge that risk, and that allows you to accept foreign currency. You weren't able to do that in the past with Bitcoin, and now they can. So CME Group has a CME Bitcoin reference rate, and they've had that since November of 2016. CME Bitcoin reference rate, a standardized reference rate and spot price index with the independent oversight are accelerating the professionalization in Bitcoin trading, further establishing digital assets as a new asset class. The BRR and the BRTI launched November 14, 2016. And then coming soon, Bitcoin futures. So it is a regulated hedge instrument. The Bitcoin real-time index right now is at 73.5404 with a 15-minute delay. Where's actual Bitcoin now?
Hold on. I didn't have my...
And then the Bitcoin reference rate is 7,068.43. And I've got the two methodologies here, but we don't have time to read them both. You can go to cmegroup.com and find those.
I mean, I'm just logging into my Bitcoin trading account. Bitcoin US dollar trading right now on the exchange I follow is 73.38.
All right, so the real-time index, the BRTI, is closer to the spot price. So the real-time index, the Bitcoin real-time index aggregates global demand to buy and sell Bitcoin into a consolidated order book and reflects the fair, instantaneous US dollar price of Bitcoin. It is geared toward low latency and timeliness and is based entirely on forward-looking input data. The BRTI is suitable for marking portfolios, executing intraday Bitcoin transactions, and risk management. And that is what the Bitcoin futures are going to be based off of. They're going to be based off of the Bitcoin reference rate, which is the other one. Let me read the methodology of the reference rate. The BRR aggregates the trade flow of major Bitcoin spot exchanges during a specific calculation window into a once-a-day reference rate of the U.S. dollar price of Bitcoin. Calculation rules are geared toward a maximum of transparency and real-time replicability in underlying spot markets. So the reference rate right now aggregates once a day, end of day, whatever the CME references as end of day. So their last update was November 2nd, which was yesterday. We're recording this on the 3rd, and it was 70.68.43. So I assume today it'll be closer to 73 and whatever we settle at today. So that's the one that they're going to do the futures off of. And again, Goldman Sachs wants to now launch. Oh, by the way, the Bitcoin ETF was rejected by regulators because there was no place to hedge risk. So there's no Bitcoin ETF currently trading on the NYSE or the NASDAQ because, and one of the reasons they gave for rejection is there's nowhere for investors in this ETF to hedge their risk. Well, guess what happens now?
There is.
Yeah. Well, I mean, pending approval. They applied for approval of this futures contract. So this just lends just an absolute air of asset class credibility to Bitcoin that was missing and that no other crypto has. I don't think that'll last. I think other cryptos will. If the futures contract for Bitcoin is successful, here comes Ethereum futures and Dash futures and Litecoin futures and everything else. It'll be a whole quadrant.
So this is just the beginning.
Beautiful news.
Now, something else.
That was Crypto Alert with Bob Iceaccino.
Well, we're not done with Crypto Alert. That was just his segment because I'm alerting people on a newly discovered malware that steals Bitcoin by monitoring users' clipboards. So Kaspersky uncovered it's a crypto shuffler malware, watches for people to go to crypto website to exchange coins, and most people copy and paste in their keys, and then it goes and steals the information and exchanges where you're sending it to a different address. So it hijacks, well, you're sending it to a legitimate place, it hijacks it, and you send it to the malware people.
Wow.
So you better check that you make sure if you're doing stuff like that, you don't have this Trojan on your machine.
Mac OS or Windows only?
I think it's Windows at this point. That just came out, I think, yesterday. But I guarantee there's going to be more people because how big Bitcoin. This is just going to attract hackers with Bitcoin, especially as it keeps getting bigger and bigger. There's going to be innovative ways to steal or hack Bitcoin sites, Bitcoin transactions. It's going to get interesting. I mean, just think about even with the fraud with credit cards, right? And how much credit card companies need to put into anti-fraud stuff. It's going to be a big area for people going after Bitcoin. It's just getting started in that. So people are going to have to monitor all the different nefarious ways people use to try to get their hands on your Bitcoin. I think that's it that I have with cryptos. Do you have anything else?
I got nothing else.
Well, we have to get into U.S. economy segment. I'm just going to go through some numbers. Then we have some FOMC news and new Fed chair. But let me just go through. Market manufacturing PMI final came in at 54.6. Last was 54.5. ISM manufacturing came in at 58.7 versus expectations of 59.5, so that just missed. Services came in at 55.3 versus expectations of 55.9, that missed. Non-manufacturing ISM came in at 60.1 versus expectations of 58.5, so that beat. Factory orders 1.4% versus expectations of 1.2%, so that beat. Atlanta Fed GDP now forecast for the fourth quarter, they're estimating 4.5% growth. I will be shocked, but that's where they're estimating right now. What did the Fed do with the meeting this week, Bob?
As expected, nothing. The only real difference, so there was no scheduled adjustment of economic growth projections or inflation projections. There was no scheduled release of an adjustment of those. The only real change anybody really noticed is they changed that we have moderate economic growth to solid economic growth. That's really it. So you saw the probability of a December rate hike go from 98% to 99.1%. I think today's jobs number secures that's done. That is baked. That is baked in the cake. That is a done deal. There will be a rate hike in December at the December meeting. The interesting thing to me is the March meeting, and the probability of a second rate hike is now at 40.5%. So that continues to creep up. That second rate hike.
Okay.
Yeah, the December rate hike as of yesterday, interestingly enough, was whereas it actually dropped a little bit, which doesn't really make any sense. It's 97% now from 98. But right after the Fed meeting, it jumped up to almost 99. It was like 98.6. Let's see what it was exactly here. 98.17.
It's a done deal.
It's a done deal, yeah.
What about are we going to have a new Fed chair?
Well, one has been nominated, that's for sure. Jerome J. Powell.
And what are your thoughts on that?
So, Jay Powell is the continuity candidate. That's what he was considered by the market. That's what he is. He has 5.5 years at the Fed. He voted with the consensus absolutely every single time. He never once dissented. So the knock on him is that he's not an academic. He is not an economist. Comes from the private equity sector. But again, having served 5.5 years as a member of the Board of Governors, he understands the procedures. He understands the conversations. Some people said that because of his investment banking background, that he might have a little bit of trouble. I mean, he worked for Bankers Trust. Remember Bankers Trust?
Oh, I haven't heard that name in forever.
I know, right? So then he was at the Carlyle Group, which is still in existence, and he's been on the Board of Governors since December 2011. President Barack Obama nominated him, and again, he's viewed as as a dove. If you put hawks and doves on from the Federal Reserve, he would be in the dove category. So it's business as usual with Jerome Powell. He's not a shocking nomination and should have no trouble getting confirmed at all. I vacillate back and forth between what the Fed should do and what they're going to do, and I find that what they're going to do to be more important. And Jay Powell certainly is predictable. John Taylor would have been the more interesting candidate. He would have actually added volatility to the market, simply because there's a Taylor rule, and people interpret that Taylor rule is named after him. And the Taylor rule basically says that rates should rise more than 1% for every 1% inflation rises. That is an oversimplification, but it's a math formula. That particular math formula relies on a neutral rate of inflation, and people calculate that differently. So it would have been really fun watching people argue about having different results on what is theoretically a mathematical formula, and watching John Taylor explain why he didn't follow the Taylor rule if he were chairman. That would be really interesting. It's like, wait, the Taylor rule says this. Why didn't you do that? Well, circumstances are... He would have had a lot of trouble, and that's why I think he would have been a bad hire, although I have a lot of respect for the guy. He would have been a bad hire because he would have had a lot of trouble, because essentially he has a rule named after him that applies to the job he would have been hired for. So he would have had a really hard time not following his own rule.
That would have been funny, though.
It would have been really funny. It's like hiring a chef that wrote an Italian cookbook to do an Italian restaurant, and he makes fajitas.
He's not following his own recipes.
Exactly. It just would have been funny. But I mean, this nomination makes life easier.
Okay. Well, that sums up our U.S. economy segment. Now, we also had stuff international. What happened with the Bank of England?
Bank of England raised rates first time in over a decade. There is a huge number of people that think they shouldn't have done this. I personally think it was okay to do it because they were only at 25 basis points. Now, the story of the UK is that they've been the weakest economy in Europe for quite some time, but they also had one of the higher inflation rates simply because of the weaker pound. Now, this was considered by the markets to be a dovish rate hike because Mark Carney, the governor of the Bank of England, in his press conference, hiked rates, and then all he did was talk about how weak the economy was and how he had no confidence that inflation was coming back. He even called this a response to, I'm paraphrasing, but a response to the currency adjustment caused by Brexit. So we may have talked about this in a prior podcast, but when your currency falls and you're a huge import economy like the UK is, they don't produce that much of what they consume anymore. That just makes everything else more expensive, so you can actually import inflation along with the goods you import when your currency weakens. Your currency now buys fewer goods because it's weaker, so the price of those goods go up. And that's where their inflation came from the currency weakening after the Brexit vote in June of last year. So he pointed to that as part of the reason for this rate hike and essentially told the market, not only are we not going to hike rates again, but this is probably not a good idea. I mean, he didn't say that, but that's how the market took it. So the sterling got hit. It was down over 1.5% against the euro. It was down over 1.25% against the dollar. It was down over 1% against the yen after a rate hike. That is atypical. So it's recovering a little bit today. But yeah, they hiked rates first time in over a decade. And not only did they do a lot of people believe they shouldn't have done it, they're not doing it again. And everybody knows it. So the sterling actually got weaker. So it may not work.
Interesting. Did you see the Eurozone CPI numbers?
I didn't actually.
Eurozone October CPI came in at 1.4 versus expectations of 1.5. Core CPI came in at 0.9 versus expectations of 1.1. So not much signs of inflation in the Eurozone.
Yeah, that's probably due to euro strength, although the Eurozone makes a lot more of what they consume. So the interesting part about it is when you have strength in your currency and yet you produce, you still can kind of be in a low inflation environment because you may import goods that you use to produce the goods that you consume. For example, let's say you purchase a lot of copper because you're doing a lot of construction. Copper, generally the biggest producer of copper is Chile. So if you've got a stronger currency, you can buy lower priced copper. That's probably a bad example because copper is priced in dollars. But there you go. If your currency is strong against the dollar, then you can buy more copper because you can get more dollars for your currency. So, yeah, the Eurozone low inflation, just Mario Draghi's doing a happy dance because all he keeps doing is pushing things off and pushing things off.
Well, that's all I had. Did you have anything else on international markets that caught your eye this week?
No, that's about it.
Then you know what time it is.
What time is it?
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
Why should you be watching the yield curve? So for those of you that don't know, the yield curve is, if you were to plot every interest rate, let's just use the U.S. as an example. Every country has a yield curve because they issue bonds with different durations. And the U.S. has interest rate measures from 1 month out to 30 years. Okay, so 1 month LIBOR, and then 3 month Eurodollars, and then 2-year notes, and so on. So if you were to plot the interest rate of every one of those things and then draw a line from every dot, you would get a curved line, and that's called the yield curve. And the yield curve is either flat or steep or somewhere in between. It's either moving toward flattening or moving toward steepening. When the yield curve is flat or flattening, that means that, let's just go from 2 years to 30 years. 2-year rates are closer to 30-year rates. And if it's steepening, then 2-year rates are farther away from 30-year rates. So if you have 2-year rates at 1%, 30-year rates at 2%, and then 2-year rates move to 1.25%, and 30-year rates move to 3%, that yield curve would steepen because the spread between those two has gotten larger. So lately, the spread has gotten tighter, smaller. That means that the yield curve is flattening. Short-term interest rates are rising faster than long-term interest rates, and there's a couple of reasons for that. Number one, the only sector of interest rates that the Federal Reserve controls is the short term. The market controls the long term. Number two, the long-term interest rates move on inflation expectations. Inflation tends to plant roots and stick around for a while, so if you are getting interest on a product for a long period of time and you think inflation is going to go up, you want a higher interest rate to compensate for that. People think, and I'm talking about everyday people, they think the Fed is raising rates, so all rates have to go higher, but they don't go higher at the same rate. Every single Fed interest rate cycle has caused a flattening of the yield curve. If the yield curve gets too flat, it can potentially invert, meaning that short-term rates are higher than long-term rates. And that is a predictor of recessions a year from that event. Now, it's not just a blip. You can't just have short-term rates blip above long-term rates. It's got to sit for a little while. If you see that happening, people will start expecting a recession sometime in the next year. It is possible that this happens with today's non-farm payroll. It's possible that the yield curve starts to move toward inversion. Not going to happen today, but it's something you should keep an eye out for, because as we move out toward that March rate hike, if that were to continue to be in the cards and the Fed were to kind of push it, and we continue to see wage growth fall like we did this week in the non-farm payrolls number, you could be leading toward an inverted yield curve, and that's a predictor of recessions. People say that it doesn't predict it with that, it's not that accurate of a predictor, but it actually is if the yield curve stays inverted for a period of time. Why would that be? Because if you're not earning money, if you're not earning interest on, let's say, a 5-year loan that you give to the government, but you're earning a higher interest rate on a 3-month loan that you give to the government, you're going to go with the 3-month loan. You get your principal back quicker. If the people or the institutions borrowing that money don't have the money for a long time, then fewer investments are made for that money, and it's less economic growth. That's 30,000-foot view of why that is recession causing. This is actually recession causing, just not recession predicting. It's recession causing. So we need to start keeping an eye on the yield curve, because the U.S. Fed definitely wants to raise rates, and we definitely don't have inflation yet. Just an add-on to that, we are starting to see prices rise a tiny bit as wages rise. That's why this particular hourly earnings number bothers me so much. That's my why.
You know what I found? I found that very interesting.
Why's that?
Because you were talking about interest rates.
Ah, nice.
See how I found that interesting?
I like that.
On a short-term and a long-term basis. Well, here's my what. We had talked a while ago about potential double bottom in gold. It is now a triple bottom. So that double bottom is gone, but a triple bottom is slightly favors a continuation pattern to the downside. So I'm going to be watching gold on a close below 1262. And then my next target for that is 1251.
Wow.
So possible bigger pullback in gold should this continuation pattern trigger.
It makes sense.
But gold. I was reading all these articles. Why go into gold anymore? It's all Bitcoin. Bitcoin's the new gold.
Yeah, I don't buy that.
No, I don't either. But I would say that's been all the rage this week. Bitcoin is the new gold.
You can pretty much buy anything if you have Bitcoins now. People are like they don't have the acceptance, but there's an app I saw called Gift, which I think is GYFT. It's not a widely known app, but they have 50,000 vendors on their app that exchange gift cards for Bitcoin. Now, Gift is the one who does it, and there's a slight fee, but it's not the vendors. But they've essentially signed up about 50,000 vendors where you can buy a gift card in Amazon, grocery stores, food, Kohl's, whoever you want. Just buy a gift card, you go out and spend it. The Gap. Everybody's on there.